Hello and welcome to Adriatic Metals' presentation to the 2020 One-to-One conference. My name is Dominic Roberts and I'm Adriatic's Head of Corporate Affairs, having joined the company in July this year. Prior to this, I was the Chief Operating Officer of the Balkans' largest privately owned base metal mining company, with operational responsibility for 5 mines in Bosnia and Serbia, and I successfully permitted the latest underground metal mine to be opened in the region. Adriatic are a Balkans-focused base and precious metals explorer and developer. Dual listed on the Australian Stock Exchange and the London main market, we are headquartered in the United Kingdom and are very proud to be a homegrown European miner. We own the world-class Vares silver project in Bosnia and have recently acquired the brownfield and highly prospective Raska Polymetallic project in southern Serbia. Both Bosnia and Serbia are exciting jurisdictions to operate in. Both have a long tradition of mining, have excellent education systems, and benefit from extensive infrastructure. Indeed, at both our Vares and Raska projects, we have sealed roads into the heart of our exploration targets, existing high-voltage power supplies, and tailing facilities already in place. And both projects are adjacent to railways that will transport the concentrates to deep water ports in the Adriatic and then globally to our end users. The economic environment is also very competitive. Bosnia has a low corporate tax rate of 10% and an effective royalty of just 0.85% at Vares. Serbia, whilst benefiting from a substantial redraft and international alignment of its mining code in 2015, has slightly higher rates at 15% corporate tax and 5% royalty. Located on continental Europe and both EU accession states, Bosnia and Serbia are jurisdictions considered as favourable for foreign investment. Vares is a world-class silver-dominated, massive sulfide polymetallic deposit. Comprising of the historic Veovaca open pit and processing plant and the recently discovered Rupice underground ore body, the financials of this project are captivating. The silver equivalent PFS was published last month with an NPV 8, 3 times our market capitalization at just over $1 billion US, an IRR of 113% and a capex of $173 million, which is a multiple of 6 to our NPV. Through further detailed localization of costs during the definitive feasibility study, we expect to refine both OPEX and CAPEX. There is also meaningful value to be created by improving the high-level PFS estimates of our product logistic costs, and we are working with the shippers to achieve this. But even today, our CAPEX to NPV or enterprise value makes this project a very attractive debt proposition and places us in the lowest quartile of our global peers when it comes to the financing of the mine. A revised maiden resource estimate was published in September this year with an impressive conversion of 88.5% of resources to reserves. We are well funded. Following the closing of the Queen's Road Capital debenture later this month, we will have over $40 million in the Treasury. And QRC are an excellent financial partner, boasting a very strong management team and investment from some of the world's leading mining grandees, including Andrew Forrest and Jack Cowan. We are also delighted to admit EBRD to our register last week. With EBRD comes the strongest possible validation of our commitment to our ESG framework and the support of one of the most influential international stakeholders in the region, both for our developing projects and our future acquisitions. I think the key takeaway from this slide is the impressive performance of the project over its first 6 years. Once commissioned in 2023, with mining at 850,000 tonnes per annum, the project will generate around $200 million of post-tax free cash flow each year, of which circa 45% is generated by our silver and gold credits. This cash flow will facilitate the rapid payback of project debt, projected at 1.2 years, and very much determines our capacity for future expansion. From 2032, as the mining shifts from the high-grade Rupice underground deposit to the lower-grade Veovaca open pit, the financial performance of the mine does drop off, but we have a plan for this. In the summer, Adriatic was awarded the largest natural resources concession ever granted in Bosnia. This 32 square kilometre extension to our existing licence captures the whole of the known mineral belt, and there are very strong indications of the potential for a repeat along the southeast trending contact between the Triassic and Jurassic sediments that host the Rupice-style massive sulfides. Initial mapping and geochemical work determined this potential, and we are currently flying an airborne magnetic survey, the results of which will be interpreted over the winter so that our drills can start work on anomalies in the wider license area in spring 21. And all of this is with a view to bring higher grade ore from the wider area to increase mill head grade after 2032 and extend the life of mine beyond its current 14 years. We are equally delighted to have acquired Tethyan Resources in the summer, bringing a second Balkans polymetallic project under our ownership. In many ways, similar to Vares, the Raska project incorporates historic open pit operations, excellent infrastructure, a wider, very prospective land package, and the potential to start processing operations in a relatively short time frame. The main Raska target is a 1.2 kilometre long, at surface polymetallic strike, with historic resources of over 7.5 million tonnes, which were confirmed by Tethyan's drilling programme prior to our acquisition. Open to the west, southeast, and importantly at depth, we've committed to a further 12,000 metres of drilling in Q4 this year, with a view to preparing a maiden resource estimate in Q2 2021. This will be a low-cost, open-pit operation in an established mining region. Both historic mine records and the recently completed metallurgical test work indicate that Raska will produce very high recovery, high grade, clean zinc and lead concentrates with associated silver and gold credits. Furthermore, the wider Raska land package is highly prospective, with Tethyan identifying a number of porphyry targets to the north and south of the tenement, and indications of parallel structures mineralization to the west. However, given the shallow historical drilling and added focused exploration on the main target, our first focus will be to extend this ore body at depth to rapidly build up the potential to develop this mine in coming years. I think what is most interesting with our development program is the economic potential for us to bring Raska into production 2 years behind Vares. With Vares debt in the summer of next year, construction starting in autumn of 21, by 2023, this project will produce sufficient cash flow to develop Raska from our own balance sheet. We have already deployed the Vares environmental and social engineers to Raska, and baseline studies start shortly, supporting the rapid development of this project into production in 2025. And I think one of the reasons we have been so successful is that from day one, we had a very strong ESG operational culture in place. And this has guided all of our decisions and actions to date. For the implementation of our 4 key tenets and the 10 behaviours, we have quickly inducted every new member of staff into our ESG focused culture. The support of our near mine communities has been tested and repeatedly found to be strong in the numerous public consultations and stakeholder engagement meetings that have already resulted in the issuance of an environmental permit in Veovaca, which will shortly be followed by an exploitation permit, and the soon-to-be issued environmental permit in Rupice. Our board comprises a strong mix of capital markets experience, with Michael Rawlinson, ex-Barclays and founder of Liberium Capital, as our chairman, and indeed Paul Cronin, a very experienced financier and our CEO. We have strong technical support from Julian Barnes and Peter Bilby, backed by a very important focus on our corporate and social responsibility by Sandra Bates, and our most recent addition to the board, Sinella Karac. Sarajevo born and bred, she's on the board of Bosnia's largest diversified manufacturer and has made a very positive impact to our government relations and permitting progress since July. The diversity of skills and the strength of our board members will, we believe, very much support our growth towards becoming a mid-tier producer. Our share price, bar the impact of COVID, has shown a steady, sustainable uptick over the years from its original listing on the ASX in May 2018 at 20 cents to today trading at $2.40 and at £1.30 on the LSE. We have an enterprise value of just short of 450 million Australian dollars and are trading at a big discount to our MPV. The shareholder breakdown shows a healthy balance between retail, high net worth, institutions, including Sprott increasing its position in the recent months. Importantly, management and shareholders' interests are wholly aligned, with existing staff and management holding nearly 20% of the company's stock. And we believe our fundamentals are both strong and compelling. A multi-asset explorer and developer, well-funded beyond DFS, and with a clear route to a substantial debt package to enable the development of Vares by 2023 and the consequent development from our own cash flow of Raska in 2025. Our management team has built many mines before, and we are very much looking forward to doing so again. Thank you for listening.